Hello, everyone. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer, and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here, I added on a small Palantir position. I should say I got back into a small Palantir position. That's it. Nothing else has changed. What's up, Jim? What's up, TJ? Ryan, Joanna, Taff. What's up, Eddie? Good to see you. Hello, Christian. And good afternoon, Carol. Cool. What's up, Sharir? All right, so CPI day today. Not without a bang, not without some surprising action. SPY's up 1.1%, Q's up 1.4%, IWM the laggard here, flat-ish on the day, with our TLT down 0.75%, so interest rates broadly ticking up. What's going on, Bill? Yeah, so I mean, just an impressive market. Let's start with the pre-market action. I was actually away driving my dad to the airport when CPI went off, but I haven't. I'm loving all the built-up trading locations and places I've traded at over the years, and I got another new one. I threw in my laptop in a hotspot on my way to the airport, and when I was on the way back, I pulled over in Wilson in front of Hungry Jack's General Store in the middle of a snow blizzard to trade for about 10 or 12 minutes when that 830 number came out. But yeah, I mean, you can just see all the volatility here. I couldn't even actually see what the numbers were. I was trying to trade the action a little bit, but there was a very quick initial downtick that led to a bounce that led to a further pullback that I guess started when the market opened and kind of gave us a little bit of a gap fill before this bigger rally came in. But yeah, initially very quick down move, then a bounce, and then we were trading back down into the market open, and that move lower continued when the market actually did open. You could see how fast we had this gap fill. So the number came in hot. I don't have the numbers in front of me, but like 0.1%, like 0.1% or so. Oh, Pat just gave them to me. Look at that. U.S. core CPI year over year, 3.8% versus forecast of 3.7%. U.S. CPI year over year, 3.2% versus forecast of 3.1%. Month over month, 0.4% versus 0.4%. So that was the only one that came in line. And core CPI month over month, 0.4% versus expectations of 0.3%. So number coming in pretty light across the board, and when you read that on the surface of things, and it was definitely my thought process when I actually walked in the door and sat down at my real computer at like, I don't know, 9:20, 9:25, and I was very quickly trying to catch up on things, I was just like, holy cow, how are we not getting smoked? Because obviously we just saw that last hot CPI where the market was trading at a lower price, and we got crushed on it. We actually analyzed that in yesterday's afternoon meeting. And then, yeah, that dip got bought, and we continued higher. And I think a lot of the expectations back in that period of time with those hotter CPIs and PPIs was that, this is just kind of a one reading, like a general quick uptick, but it doesn't actually change anything from the Fed as long as it's not sustained. And then seeing a hot number come in again today, you say to yourself, like, ooh, two kind of hot numbers in a row. Like maybe this inflation is a little bit more sustained, and I would think that would lead to a potentially pretty bad downtick for the market. But just seeing the headline print is really not enough. You need to know the composition, which Dimitri was getting into a little bit in the VTF at a certain point, and Josh gave some information from Goldman. But in addition to that, it always also has to do with market dynamics. So kind of want to read two takes in the VTF here out loud. One that came from Bill K and one that came from Goldman via Josh. So Bill at 242 in the VTF on the CPI said it wasn't hot enough, and vol was decently priced in. There's no forward implied vol priced in for the rest of the March cycle, so it makes sense to me that we see vol coming in a lot. If you had protection for today, you're rolling to April and offering it down. So acting as a kind of a vol compression mechanic, which helps to boost the market off of a CPI number that wasn't hot enough. But I think we need to take that in conjunction with what Josh provided us from Goldman, 3:19 p.m. in the VTF. Today's CPI ran hot, but the composition was disinflationary, with a sharp normalization in non-housing services inflation and a return to the Q4 trend for the owner's equivalent rent category. We also expect the rise in used car prices to more than reverse this spring. We continue to expect the FOMC to leave the Fed funds rate unchanged at the March meeting and to begin the easing cycle in June. So that's a little more information perhaps on the hot CPI not being hot enough. You combine that to lead to kind of a vol dampening effect on the market, which helps to boost the equity market obviously even higher, and all of this with no real change, I think, on the expectation of when we're actually going to see cuts. So again, from the Goldman note, we continue to expect the FOMC to leave the Fed funds rate unchanged at the March meeting and to begin the easing cycle in June, which is pretty much what the market's already pricing in. Last I saw, there's about a 25% chance of a May cut and like a 75% chance of a June cut. So looking more and more like it'll be June and not May. But those expectations, I think, are relatively unchanged based on the event today, and that therefore had the effect of really boosting this market up and giving us this big up move. But particularly with the SPYs and the Qs, which are a little bit less interest rate sensitive, and the IWM lagging, with the TLT again being down and interest rates being up. So I think off of the first view, at least for me, again, sitting down at my computer here really just like 10 minutes before the open and trying to digest the information, saying to myself, like, wow, how are we even holding in? But, there had to be more to it, and it turns out there was. So that's kind of where we're at. I mean, it really impressive day. From a trading perspective, again, a lot of that research that we just kind of discussed, I didn't even really get to dive into until the afternoon part of today's trading session, which is unfortunate, and it's why pre-market research is so important. It might have given me a little bit more conviction on the long that I called out at lows. But we had a couple of really good trades right off the open. Immediately as the market opened, and we had the gap up in the SPYs and the Qs, and you saw this quick tail come in the SPYs and this quick tail come in the Qs that had us trade back through 440, which we know is a key momentum level for the Qs. The equivalent of QQQ 440 is SPY 510. We called out that you could be short versus highs. That was a good early short call out, really looking for the move into that equilibrium area, looking for the move into the gap fill. It worked perfect. We called out to cover, a lot of your position. I covered the vast majority of my TQQQ position actually by this low. And then even though I didn't take it, called out here for the bounce trade. And my expectation at that time was for the bounce trade to actually lead to a lower high, not for us to have a V bottom, get above 440 and, close up a whole bunch on the day. Obviously, with the gift of hindsight and having a better understanding of the information around the CPI and the positioning around the CPI, it makes more sense to me now than it did earlier that we were able to do what we did. But this was also a really good long call, and while I was just really looking for a bounce off those lows, this is why I always say you never really know exactly what the market's going to do. It's always worth it to hold a runner, to trail part of the position, even if you want to call this a counter trend trade, which technically it was in the 5-minute, but it coincides with the trend on the daily. Keep a little bit just to see what it can actually do for you. And that trade just worked, obviously, phenomenally well. The Qs worked their way back up to that 440. The SPYs kind of led the charge in some ways. There There's a little bit of rotation going back and forth between the Qs and the IWM on relative strength, and like always, the SPYs always seem like they're the beneficiary of that. And the IWM, which was most weak off the open, actually showed relative strength on the third 5-minute bar of the day, which helped me a little bit actually with the conviction on the call for the Qs off the fourth 5-minute bar of the day, because they were weaker, because the IWM, which was the weakest off the open, actually started to bounce. So with the IWM, the weakest sector bouncing, it makes sense to me, and we've seen a lot of this over the course of the last couple of years, that the SPYs and the Qs, where the actual relative strength was earlier, will follow through on what initially becomes an oversold bounce for the IWM. And then into this bounce, we're like, wow, this is really impressive. Can the IWM get above 205 and break opening highs? Can the SPYs get back above, basically opening highs, get above 514? Can the Qs get above that momentum 440 level? It sat there for like 10 minutes or so, but really was just digesting some of the 5-minute extension before breaking higher. And that was it. The market was pretty much on from that point. I guess a little bit of midday weakness, which reversed back up, and the IWM was certainly most relatively weak. And at a certain point in this pullback, actually, I'm remembering now as I talk about it, midday was becoming concerning. The SPYs felt like maybe they were pulling back a little bit too far. The Qs a little bit too far also, but not necessarily the end of the world. You can see the Qs perfectly held that 440 on the retest, but the IWM weakness and the percentage that it gave back in this down move of this up move was concerning. But this is where your relative weakness was, and then we ended up pretty much closing strong across the board. So we survived the CPI, and the market looks healthy as it has. It really has. 2 trading sessions ago, I thought was a day to take notice of. We still have not gotten above the high from 2 trading sessions ago in the SPYs or the Qs. So we'll see if the market's able to get some further follow-through throughout this week. For the moment, it looks like it will. And if we can, clear 2 trading sessions ago, which is when we had that topping tail and negative Maribozu for NVIDIA and AMD, and the semiconductors obviously have been the most important sector right now, then, the market would just look stupendous again. The market, it looks phenomenal. It really does. Even on the small time frame, once we were able to break that opening high again, once the Qs got back above 440, the technicals here are just looking really good, kind of across the board. And if they keep just selling vol and bringing this VIX down, there's no reason at all why this market should not continue to go higher now in the near term that we got through. I keep saying it. You need a catalyst to really fail this market down and fail this trend, and we just keep not getting it. And today was that again. And while the trend is your friend, and all of the VIX compression, vol compression is kind of continuing to happen, which moves this market further up, and positioning is notably high, but not like extremely extreme where it's overly problematic yet. There's no reason why this market can't continue to go higher. The trend is your friend, and let's continue to follow it. So let's just see where the relative strength rotates to next and try to hop on board, and we'll just keep doing that until and unless we lose some major daily levels of this trend on the downside, and then at that point we can readjust. But we had a lot of conviction, I think, in the long side of the market at the end of last year and the beginning of this year. I would say that, talking about myself personally, I've had a little bit less conviction in the long side of the market over the course of the last month or so. But doing that with a recognition that the trend is your friend, I say it all the time. It's one of my favorite sayings in trading. Trends tend to last for much longer than anyone expects that they will. If you asked me at the end of December, as Josh likes to say, bageled ahead, when will the uptrend end? I probably would have said at some point, by mid-February, this trend will struggle to be able to continue. And here we are. It's a whole month after that, and the market is showing absolutely no signs of not continuing. So that's pretty much it. The market here is just an absolute monster. From a trading perspective, I did not trade aggressively today outside of managing the positions that I'm already in, and following game plans for positions that I already have on. Just an important trading psychology thing that traders should remember. It's always really important to know, where your headspace is. It's important to know if, for example, like myself today, I just didn't have the time to do the research that I normally do every morning. I mean, I usually spend, I don't know, at least 2 hours researching every morning, and today I got to spend about 7 minutes before the market opened doing my research. So, know yourself. And I didn't feel like I had a, real good feel for the market this morning. I was a little bit surprised to see that we were trading as well as we were initially on a hot CPI number. But I know myself well enough to know that for my own trading, my best trading really occurs based on my morning research. So if I haven't been able to really do my morning research properly, I'm not going to push things. And that was it. So I did not trade too aggressively today at all, outside of the names that I was already game planned to trade. It's the same deal on, we talked about this a week or two ago also. If you got a bad night's sleep, or you were out partying last night, or, your girlfriend broke up with you, or whatever your deal is that has your head not in the game, it's really important as a trader to recognize that and know when to pull back, because you haven't given yourself the same edge that you normally have on a day-to-day basis. The one thing I went after, which was probably really frustrating for a few people that were in it, Rex and Eddie, was this SOUN. This is one of those names I would start by saying that I have no belief in at all. It just seems to me like it's one of these bubblish names on AI stuff. With that said, I don't know, maybe it's something real. I've never really researched it, but I think that their revenue numbers are like $10 million. It's like some crazy nonsense. And even after I was in it, I was doing like a quick like Yahoo Finance profile read on this thing, because I actually have no idea what they do. And even after reading their profile, I still kind of have no idea what they do. They make voice AI that they can sell to businesses so that they don't have to hire Eddie Webb's beautiful voice, and they can use robots instead. That's what it sounds like to me. Sorry, Eddie. Maybe being long the stock is a good hedge for your traditional career as a radio guy. I hope you don't mind me saying that. I don't think it's a secret. But I definitely don't believe in this company at all. But look at the daily chart. The daily chart looked phenomenal coming in today. This is a great daily chart setup here, as this wedge that's built out in this momentum name is breaking to the upside when there's no real extension, because you just spent 2 days sitting on the ADMA and you have that inside day there. So if you're breaking above that, especially if you have volume confirmation, that could be one of those signals that this thing is going to work its way right back to this $8 high or beyond that $8 high. To me, when I look at a stock like this, that, as far as I'm concerned, I don't know, this thing is worth 30 cents, or it's worth $5, or it's worth $8, or it's worth $20. It's like cryptocurrency. It's as worth as much as the next greater fool is willing to buy it for, kind of in my opinion. But that doesn't mean that I'm afraid to make money in it if a good setup is there. And it looked like a good setup, especially if you had volume confirmation, and then bam, you had this big break on really good volume confirmation. Look at the volume here as you're breaking above the inside day for continuation and breaking above the opening high. So I chased price a little bit with like a low 630 something purchase, and kind of said, the outs that you could look at, one, just a pure momentum out would be that inside day high from yesterday. But I prefer with these types of trades to use either a pivot low or some sort of ignition candle. An ignition candle would be a high volume candle like this one that usually coincides with some sort of breakout. So what do you know about this candle? A lot of people just bought the stock because this is the biggest volume. That bar is the biggest volume that it's had since March 5th, and so it's a big volume bar for the stock. So why is this a good stop loss below that opening, below the low of this bar? Because if it gets below that low, every single person that just bought over the confines of this bar is now out of the money. And what do people do when they're out of the money? They tend to sell. So if you're breaking the opening of this bar, then there becomes a good chance that you could actually get continuation to the downside because all those people have to puke out stock. So I like using that as a stop loss. I do prefer a little bit pivot lows compared to anything else, which the pivot low would be down here at 588, and then that just becomes way too much risk. If my price is, let's say, 630, I'm not risking 40 cents in a $6 stock, even if that $6 stock is the type of crazy name that could rip to $8 to $10 if it wants to. It just seems like too much risk. So I like this $6.10 stop loss. Unfortunately, the stock pushed right through it by like a penny or two, which just sucks. And that's sometimes the danger of trading. I mean, this thing didn't do anything necessarily unhealthy. It did break that area where all these people are out of the money that could lead to a feedback cycle of selling. It did slightly over push this equilibrium area on the 5-minute chart, right? Like ideally you want to see those pivots come in somewhere in the space to the 8 and 21 EMA, but we know that it's not necessarily the end of the world for a stock to overshoot the 21 EMA by a little bit and then pivot right up and give continuation. And that just happened to be what happened here. There was a really deep pullback for the stock. I think there was some internal cycle of selling that was coming in here that was able to just push through that 11 cents, stop a bunch of us out, and then worked and gave fantastic continuation and pretty much closed on high. So that's unfortunate. That was like the one trade today that I saw intraday that I really liked, that popped up on my radar, having done no real research at all this morning. And that's pretty much it. It's pretty much all I got for you guys. So happy to analyze that trade because I called it out and failed, and a few of us were in it. And happy to analyze the market like we always do because we understand its importance. But outside of that, I don't really have very much for you guys, and I'm happy to answer any questions that anyone may have. So I've actually never been there, Dimitri. Trout and eggs at Nora's. I gotta check it out. Ryan O. Looks like he's given me some info on SOUN. I've been trying to dig in a bit to them. My wife is an AI ML, I don't know what ML is, engineer, and was a bit impressed by their machine learning, by their natural language processing. Yeah, that's what I was reading about, product in their videos online. Here are some videos you can look at when you have time. I've been out of the stock but want to get back in. Okay, cool. I'll check it out. I do remember, I think it was that last earnings report that they reported revenue of the quarter of like some ridiculously low number of like $10 million or so. So, this is always the case when you're dealing with these types of stocks. $16 million. It's crazy. When you're dealing with these types of stocks where you're balancing growth potential versus, dare I say, valuation? Dare I say valuation if anyone could possibly value a company that has $16 million in revenue and who knows what the earnings losses actually are. It was 17.14 million to be exact on 17.7 estimate. It's just a total growth story, right? So, and that's why I'm saying like it's probably still better than crypto because at least this company does something. So I've become such a crypto hater recently. It's been bad. I was very neutral on it for a very long time and saying, I don't care. It's a trading vehicle like anything else. And I've really become kind of a hater recently, which I probably shouldn't be. I probably should go back to that neutral thought process and just trade the price action. I can't get over crypto. It just makes no sense. So yeah, at least this company does something, but it's that story of, can growth ever actually catch up? And I haven't done any valuation exercises on this type of company, but trading at $7 now with $17 million in revenue, I mean, you better have some incredible growth behind that to justify these types of moves. And that's what I'm saying, like, You tell me this thing is worth 50 cents, I'll say okay. You tell me it's worth $8, I'll say okay. You tell me it's worth $15 or $20, I'll say okay. Because it's all like the same to me. It's at a point like this, so early in the growth story of this company, it's pretty much worth what the next person's willing to pay for it. Cool. So thanks for the info there, Ryan. From Pat, one of Sailor's arguments was, if you want to wake up and buy a house in Africa on a Sunday morning, this is the way to do it. Okay, maybe in Zimbabwe where they have no actual currency. But I'm pretty sure if I was in South Africa, I could just, have rands and buy it also. It might not be able to do it on the same morning that I woke up and decided to. I might need 3 days. But I'm sure I could get it done. Thanks, Pat. From Rex here. Question regarding the call out at 9:45 this morning. You called out the long at 9:45. Would you mind talking about it? I was thinking it might be a little bit too early taking the long, as the markets were below the CPI starting point, especially the Qs went red, and below the small time frame equilibrium. I took a small long on NVIDIA as it showed some relative strength, but I'm not too confident about it, and it turned out that it worked out great. Sure. So first thing I would actually want to point out is the IWM. So if you remember, after the second candle ended, so now it's 9:40. After the second candle ended, I said out loud, I would love for like one more big sell bar in the Russell, because then I think I'll have enough extension to look for an extension bounce. And I didn't get it. It immediately started bouncing back on the third bar there, which was an interesting relative strength, relative weakness flip, because the IWM is the one that opened up flat when the SPYs and Qs opened up green, and even with opening up worse than the SPYs and the Qs, sold harder than the SPYs and the Qs in the first 10 minutes. I mean, you can just see that by looking at how wide those candles are in the first 10 minutes of selling in the Qs, and especially the SPYs versus the IWM. So initially I was like, man, I would love one more big sell bar here for the IWM, and I can come in on the other side and look for the extension bounce. And then it started bouncing without me. And I said, well, that's actually curious if this is bouncing without me, because that means it's showing relative strength. Because now look at the third bar in the IWM, which is green, and look at the third bar for the SPYs, which is a tighter red sell bar still into this equilibrium area, and the third bar for the Qs, which is just a straight, sell bar here for the Qs. And now the fourth bar comes in, and this is how, by the way, this is a good exercise that we're doing this, because this is how I am studying markets in real time. I'm looking at all three of these indices and their price action in conjunction with one another, not each one independently, but how they're all trading versus each other. And I'm doing that, watching all three of the indices and how they're trading, with how I'm watching the stocks that I'm involved in and the stocks that I'm looking to trade at the same time. And I'm doing that bar by bar as that bar is forming. So it's like, okay, I'm not getting my further selling that I want in the IWM. Now the IWM is showing relative strength, it's bouncing back. Qs and SPYs are still selling, but they opened up pretty big. I mean, this is a big move for the Qs, and granted, it's CPI day, so you're gonna get big moves, but it's still a big move. You started with these Qs giving a high of 440 and change, and now by that fourth bar, they're trying to create a little bit of a tail here at 436.50. So this is a $4 down move basically in 20 minutes off the open that fills the gap, slightly overshoots the gap, gets into that equilibrium area, and then gives that tail. So, I mean, this is just kind of how markets work, right? After a really big move in one direction, I know you don't have like extension here in the Qs, but instead, if anything, you actually started with extension to the upside and fully satisfied that with a heavy price correction into the gap fill, into the equilibrium area, and then began to give that tail. So I'm short the Qs, right? That was the first call out, was short off the opening high. I'm short the Qs. I'm reading this price action first as, okay, I really need to do some covering of my short. That was a good trade, but now the market is indicating to me that it should actually give a bounce back here. And that was probably the first thing I called out. So it started with, boy, if I can get some further selling in the IWM, I'm going to look for the long, which then turned into, wow, it's interesting, the relative strength, and especially because we know that the IWM can lead sometimes, to then looking at the area and the cues and how heavy and hard this sold, and then it was creating this doji, to the next kind of call out being, if you are short the spies and the cues, I think that you should really be covering some more aggressively in this area, which then led to the thought process of, well, actually, not only is this a great spot to cover your short, this is also a spot where you could look long for a bounce trade. And again, I don't want to give myself more credit than I deserve on the call. I was calling out the long here for a bounce trade. I think I literally said you could look for a move to 438.50 to 439, and then we'll see if a lower high comes in, which could be shortable. That's really what the thought process was. So to me, this was like a reward limiting counter trend trade on the 5-minute chart, though of course we want to keep in mind in the back of our head that it is with the trend on the big time frame, and that there's a lot of value to being with the trend on the big time frame. Like if you are counter trend on a 5 or a 15-minute chart, like this trade was, but with the trend on the big time frame, then you have a much higher probability of getting a actual reversal of the weaker price action on the small time frame than you would if the daily chart was breaking down also, which at this point it's not, right? The daily chart for the Qs here is still above all major support levels. It lost the 440 momentum support level, but still above all major support levels. So yeah, don't want to give myself more credit than is deserved. Really just felt this was a good spot to look for a bounce trade after the degree of violence that we had on these first 3.5 bars. And thanks, Rich. And then it turned into more, which goes back to what I am also always saying about, keep that extra piece and let it ride and see what it can do. So circling back to your NVIDIA trade's great because NVIDIA is showing relative strength compared to the spies and the Qs. So you're like, wow, the Qs here look like they can give the bounce. Derrick just called it out. But I'm not going to buy the Qs. I'm going to buy what's relatively strong to the Qs, which is NVIDIA. It never even went red. It never even really broke below that equilibrium area. It didn't sell as hard or as viciously as the SPY or Qs did off the open. So that's a great job, Rex, on combining your market information with relative strength and going after an individual stock. And I would also say that you did the right thing about not necessarily being super heavy on it. You're like, I got it in and it wasn't super heavy. It turned out to be a great trade. I think that's the right thing because going back to what I was saying about the Qs here initially, we weren't, or at least I wasn't, looking for this to be a V-bottom reversal to get above 440 and close at 444 on the day. I was looking for the oversold bounce to then see if we get a lower high that could be shorted. And when you're taking a counter trend trade, even though again this is a counter trend trade that's with the trend on the big time frame, so that inherently makes it better. When you're taking a counter trend trade, they're reward limiting. So you don't want to take as much risk because you want to assume that at some point you are actually going to get stopped out. So thanks for the question there, Rex, and good job with your trade. From Chris K. Sometimes you call out price levels in stock we're looking at. Traditionally, I thought I understood what support and resistance levels are at, but most of the time price levels people call out in the VTF don't align with my levels, which isn't a good thing. Can you pull up any chart and go over how you mark out price levels if you don't mind? I definitely don't mind. It's not off topic because the Q&A here that we do at the end of each afternoon meeting is to benefit everyone. One thing that I would say is if you feel like some of the information as you see it does not align with some of the information that I see it or somebody else sees it in the VTF, one of the best things that you could do is also to communicate that or ask those questions in real time. So if I'm communicating a level or whatever and you're curious about that level because you see it differently, ask about it in real time. That's probably going to be an even better way to learn than me just kind of taking a random chart and us kind of going over it. but I'm happy to do that also. So I don't know, spies. So the first thing I would say, to me, the daily chart's the most important chart. Levels that I like to trade off of Carvana. Sure, I can do Carvana. Levels that I like to trade off of tend to be daily levels. And a lot of times, daily levels are not, when they are, it's great, but a lot of times they're not like one specific price point. Like most of the time, a support or resistance level is not going to be $75, unfortunately. It's going to be the area between, 74.70 and 75 quarter or something like that. And then we try to narrow down that area as best as we can based on what we're seeing price action wise on a smaller time frame, on like a 5-minute chart or a 15-minute chart, and then maybe we actually can narrow that range down to saying, it's $75 seems like it's the real trigger price to me where I want to pull the trigger of getting long or short or whatever it is that I want to do based on my trade setup. But yeah, I don't know. Looking at Carvana, just I guess going back to the end of the year, I could start here with November. November, after the stock had pulled back a bit, it bounced a bit, and then was creating what seems to me like fairly clear resistance at about $35. And again, it's not going to be $35 super clean. You can see my yellow line here going across the chart. There are some tails through it, so it's probably a range around that 35. This high here is 35 on the dot. It's nice. This high here is 34.87. This high here of this tail is 36.47. So it traded through it by $1.50, but closed below it. The closing prices are important to confirm those levels, right? Like tailing through the levels down enough, you need to close above the level. Here's another tail through the level that goes to as high as 35.72. And then finally, it looks like on this day here on on the first day of December, it was actually able to close above 35 for the first time, closing at 35.20 before then creating a gap up. So first thing I would say, if I was looking at this thing throughout the month of November and putting it on my list or whatever, as I would be saying 35 or the $35 area or the space between 34.87 and 35 quarter or whatever some of those tail highs are. Then there was some sort of event here, maybe earnings, I don't know, December, that caused a gap up and a little bit of a volume increase. And now that 35 is still kind of important, though it never really gets fully tested as support. The low here is 36.50. So that pivot low is going to be important to me. The 36.53 is going to be an absolute low that's going to be very important to me. But also you can see here that it's roughly held like, this 37.40 area that it looks like for a while. So I would probably say that my new support that's now developed is the space between like 37.40, where we have a bunch of lows, and this absolute pivot low of 36.53. And resistance is, similarly 40.50 through like $41-ish, even though we got some tails that go as high as 42.12. And then you get your breakout for continuation on the 13th, and then this thing just explodes. Pulls back to the equilibrium area. Can this create some sort of a pivot? It tries to, it fails, it pulls back even deeper, it gets to the 21 EMA, so the lower band of equilibrium. Can it pivot in this area? No, it just continues to trade lower. Now, by this point to me, the name would kind of go on a do not trade list for a little while, because now the chart became very unclean. I like these clean charts. I like how this Carvana November straight line resistance, even if it's a little bit sloppy, is 35, and then it breaks higher and you get a higher low and you get your new support and new resistance, and it breaks higher and you get this inside and up 1, 2, 3 play here for further momentum continuation on this thing. And now, okay, it's really extended here from this equilibrium area. Fine. What do extended stocks need to do? Well, they could continue further if there's momentum and volume, but extended stocks need to correct through price or time. What do I want to see? I want to see the stock move sideways and the 80 EMA catch up. I want to see the stock move down and create a pivot point somewhere in this equilibrium zone between the 8 and 21 EMA. Again, it attempts to here. It attempts to bounce. It fails. Not necessarily the end of the world, but if you want to give me a deeper pivot low relatively quickly and then start to bounce, but it doesn't. It just trades straight down here on January 2nd, gets below this equilibrium zone, starts to hold below it, And now at this point, this thing, in my opinion, is pulled back too deep. It's not bouncing. The chart's getting sloppy. I'm done. I'm done with it. When I look at charts like this, a common thing that you might hear me say in morning meetings or whatever, if someone asks me to look at a name or if I'm looking at them by myself, I'll say like, okay, I'll keep Carvana on my watch list, but for the moment the name is out of play and it needs to reset up. It needs to give me a new trading setup to actually come into the stock. And then, what does that look like? How does that form? I have no idea. Every circumstance now is going to be unique on how that trade setup is going to form and when this thing will come back into play. It might be out of play and off my watch list, or untradeable as far as I'm concerned based on the daily chart for a week, a month, 6 months, forever. So thing gets sloppy here, but it eventually over time, over the course of a couple months, establishes some new support at approximately 40.50. We have a low here at 47. It bounces off that, but comes back down. This is potentially like another lower high, but doesn't make a lower low. It more or less holds the same area. This low is 40.62. So this one was 40.70. So roughly equal lows. Tries to bounce again, but gives another lower high. But again, kind of an equal-ish low. Overshoots it by a little bit, but doesn't give any follow-through. Making an absolute low at 40.21. So what you're starting to get here is you're starting to get a bit of a wedge where you have lower highs that are still coming in, but roughly equal lows. So that's the beginning of a setup starting to come into play. And then that wedge breaks to the upside here. So probably not a trade that I'm going to be involved in, to be totally honest, but people who are a little more chart pattern focused than I am and like to draw the lines all over the place on their charts, could easily say, hey, look at this wedge that's building out. Let's see which way this wedge breaks. I love that right at the end of the wedge. I love when your patterns tighten up right before they break. I love that you get this inside day here right before the break. And then after the inside day, and because that is actually your like trade catalyst, right? You have the inside bar that you can trade, and normally I don't like inside candles in consolidations, but this is at the end of a tightening wedge, so it's a little bit different. And then it actually breaks to the upside with a little bit of a volume pickup, so you get the inside day and up. That support level holds, and the wedge pattern, if you were to draw that line, is also breaking to the upside. Okay, let's see what it can do. Can it now uptrend from here? And it begins to work higher. You got some previous levels that you could pay attention to. What are going to be the important previous levels? Any previous resistance or any previous pivots? So as I'm saying that, I see your comment that you emphasize a little bit too much on tails. But I would argue that like this tail high here from December 28th, even though it's small, that was a lower high there. Like I think that this carries some importance. This high, I think this high carries some importance, and the absolute high carries some importance. So I'm paying attention to both like broader support resistance zones, and I'm also paying attention to actual pivot points, because pivot points are important. What happened at this high here on December 28th? That high being 56.60. Well, at that high, sellers took control from buyers. It creates a pivot. So that is going to be an important level for the stock going forward. On this day, at that price, sellers took control from buyers. Same thing with this high. So I would be looking at those prices, roughly. I'm not expecting them to act perfect. I'm not expecting, necessarily 56.60 on the dot to be this perfect magical level that's held. But I understand that this is an area where there was previous supply that outweighed demand and drove it down. So I'm going to pay attention to that into this bounce. Is probably, a good spot to book some profit broadly into this 55.50 area, into this initial move. If you caught this like 5-day move here to the upside, which is pretty good. And now once again, this pattern just broke out. I needed to reset up. And what does it do for my reset up? Well, it doesn't really do anything. Before it ever resets up again, you get your next news catalyst, which I think was earnings here on February 23rd, that then rips the stock higher. And then when you get this big of a gap, yeah, you can still pay attention to some previous levels if they can get retested. That 62.50 could be an important previous level to kind of pay attention to. But now for the most part, this thing, guess what? Once again, it needs to reset up. It needs to reset up. Um, Big earnings gap here. You have a lot of extension. How does it reset up? Okay, you get this inside and up on day 2 to day 3. That looks like a very hard trade to me. Now you're starting to flag here a little bit. This ADMA is catching up. That becomes a little bit better. And now I like these setups as they're starting to come in. I like this wedge here that breaks the upside, even though it failed. I like this for some momentum continuation. The ADMA fully caught up. It's kind of the same deal. You have some, you know, you have some support here from a base kind of the downside of the wedge. You have some resistance here. Like, I like the idea of trying to be long this thing for a further squeeze on March 8th, 2 trading sessions ago, even though with the gift of hindsight, it clearly and obviously fails. That I think was a good setup to maybe look for long continuation. So one thing that I would pull away from this analysis that we just did that goes back, whatever, 5 months or so, is that probably most of the time for most stocks, there isn't actually a setup. And therefore, you can't be implementing new trades in the same stock every day. You might see that I personally trade the same stocks like over and over and over and over again. I trade them every day, and I absolutely do. But what you have to realize is that that's a continuation of a game plan of a trade that I'm already in. That's not a new trade that I'm getting into. If you actually go through and you analyze stocks for setups, most stocks on most days are not giving you a new setup. I mean, you know, how many over the course of 2, 3, 4.5 months here, how many real trade setups were we actually able to identify? And then even after you identify them, did they trigger? And even if they trigger, it sometimes still isn't even worth getting into it because the risk reward was no good when it actually triggered. Like, we were able to identify, you know, that there was this $34.50 or $35 breakout or whatever. We were able to identify another kind of breakout here at this $41 area. We were looking for the pivot to come in. You could have tried to go long off of this low. That was another potential trade. So now what are we up to? Trade 3. Then it got out of play. There was some support there. Maybe you try to go long off support, or this wedge breaks. It's like trade 4. And then there was just nothing in here, kind of nothing in here. Maybe a trade here on this day, maybe a trade here on this day. So overall, and this is using Carvana, which is a name that actually has generally been in play, which means that there's probably more trade setups in this chart and in this name than the average stock that you would look at. But even with that, if you go back over the course of whatever I just said, I think 1, 2, 3, 4, 4.5 months, what did we actually come up with? 5, 6 actual trade setups. So maybe we could say, and this probably isn't necessarily accurate because we just analyzed one name, maybe on average every stock that's out there gives you one really good daily chart setup per month. And then all the other times it's relatively out of play, which doesn't mean that you're not in it. You know, I think that the best trades, like my favorite trades or some of the best trades are, you bought that whatever $41 breakout here in Carvana on December 13th, and then you end up trading it and being involved in this trade for the next, I don't know, second half of the month. Maybe you end up getting stopped out on a trailing stop loss on January 2nd, and then you're out of it. But you are in the name and potentially trading the name and managing the position and trading it back and forth for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 trading sessions, right? So now circling back to what I just said, maybe there's only one trade setup per name per month, but if the trade works and it closes well, like it did here for Carvana on the 13th, then maybe that's actually something that is a continuous trade or something that you're trading around a core position that you're swinging, that you're implementing a game plan on, that can have you in for 13 days straight. Or, you know, this wedge break, maybe you're in this thing from the wedge break until the earnings report, and then you're making a decision, do I have enough of a profit cushion to hold this into the earnings report? Probably not, but maybe you do. Or am I liquidating the position because I don't want to gamble into the report? But that's another, you know, setup where you took this at the beginning of the month and then you were in it for half the month. So, I like that a lot. But, again, one of the good lessons here, I think, is that you can't just, have 5 stocks that you think you can find new really good trade setups in, every day or every other day. I just don't think it necessarily works that way. Maybe you can if all you do is trade 5-minute charts, and there are people who can do that successfully, but I would argue that the best trades, the best risk-reward trades, the best reward potential trades generally are going to stem from starting at those daily charts and then breaking it down to the small time frame. So thanks for the question, Chris. I hope that helps. It looks like I got through things in the VTF, so I'm going to pop over to the YouTube. We got a bunch of comments here in the YouTube. I think the semi-stocks with NVIDIA and SMCI will continue to go higher, and will AVGO recover also. Interestingly enough, I said at one point today when NVIDIA was first bouncing that I really don't expect that NVIDIA by the end of today or the end of tomorrow is going to be back above the high from this kind of failure candle here on the 8th. That's what I said. Now seeing how well this thing closed into the end of the day and seeing how consistent the option flow was, and recognizing that the market's looking super bullish and needs leadership, and this is where the leadership is, I want to pull back on that commentary a little bit. But I would certainly not be buying this thing here and now if you're not already in it. I still think that there's a good chance of failure, of this not being able to clear that high, of it just retracing a percentage of this and then failing. But I say that as I think about how this market probably wants to continue to go higher, how vol compression should continue to make the market move higher. And when I look at where the leadership should come from to make the market move higher, I can't ignore NVIDIA, especially after a day like today. And now it makes me pull back a little bit on my comment that I had in the VTF earlier today about I'd be surprised if this thing can just fully retrace that move from 2 trading sessions ago. Within a few days, it'd be making new highs. It's looking like a higher probability situation than I originally thought. So yeah, and SMCI in some ways looks even better to do that. SMCI looks even better to do that than NVIDIA does. It's much closer, and it didn't have as much of a failure candle as NVIDIA did 2 trading sessions ago. So we'll see. And then as far as AVGO, I don't know. I didn't like that earnings report from this thing. I also think it's a tough stock to trade, so I don't like to go after it because it's expensive and spready. I want to say don't go after the one that's not the leader, but this was a leader until the earnings report. I don't know. I don't have a good feel for you on this AVGO. I definitely don't trust it. So, it's the best I can do. From Robert, you still impress me with your professional approach. Thank you. Speaking of pulling on the side from the airport to trade, I would be like, guys, I am coming later. That's it. Was there anything during your trading career which pushed you to develop the willpower to not use any excuse at all? As I am in traveling mode right now, I am way too comfortable and missing lots of price action. I appreciate the compliment, Robert. I definitely do. I think it's okay, though. I don't think that you need to be like me, who can't miss, 10 minutes of the CPI price action today because there might be a lot of opportunity, or and I think it's kind of cool and I enjoy it a little bit to some degree. Like last October when I was trading in Zimbabwe, or trading outside wild elk, like running in front of the place that I was staying at, and monkeys and stuff. I kind of enjoy it. I do enjoy it. I like that environment, but you got to have balance in your life. The beautiful thing about markets is that markets are an opportunity creating mechanism. You don't need to be in every trade. And as a matter of fact, you shouldn't be in every trade for a variety of reasons. One is that the most important thing in trading is risk management and money management. And if your risk management and money management rules are telling you that you should not be trading, then I don't really care what the opportunity is that's in front of you. Maybe you could make some exception for a very rare A+ opportunity, but you should not be trading if it violates your risk management and money management rules, is one. And then two, you got to enjoy life. You know, life is too short. It really is. You got to enjoy it. You don't see it from me now, but the truth is, in the back of my mind, I am actively considering and exploring ways where I can actually work a little bit less and trade a little bit less than I have. I haven't gone home flat in probably 9 years at this point, or some crazy amount of years. I just haven't been home flat, and that's part of the reason why. Also, I need to pull over on the side of the road and trade the CPI, is because I've got 11 swing positions on, and the fact of the matter is that pulling over there at that time wasn't a tremendous amount of money, but it's like $12. It probably made or saved me $800 or so from a position management perspective. That's not nothing for a quick $12 pullover 12-minute pullover on the side of the road. But I definitely think that balance is important. I personally try to find balance in other ways. Like one of the greatest things for me ever, as far as I'm concerned, is the remote work attitude that we can have now towards trading, compared to what I did for my first 10 years at T3, where I was in an office for 5 days a week. Because I might work like a really long day today and be very focused on the market, and when I'm done with this afternoon meeting, I'm probably going to be doing some more research and catching up on some reading and things like that I haven't gotten up to. But the other side of the coin is that as soon as I decide to actually shut this computer down, I'm just in like this incredible place that I'm in right now. It's almost like a permanent vacation while I'm also working. So that helps to really give me a lot of that balance, where then I don't feel like when I'm taking that vacation that is like my only chance to actually be able to get away for a few days or whatever. I haven't told Pat yet, but I'm probably going to take like 2 or 3 days off in April, and maybe 1 day off at the very end of March in like 2 weeks or so. Pat, if you're listening, just not sure what days yet. So yeah, thanks for the question, Robert. You'll let Josh know. Never get so busy making a living that you forget to make a life. From Bill. I don't know who the quote's from, but I like it. From Apex Joy in the VTF. ALT seems to form a similar wedge pattern as SOUN. They have a GLP-1 drug in the pipeline. ALT. I don't like to trade the individual biotechs too much. I certainly see the setup, though, as the second I type it up, just the break of this. It's a little bit steep. It pulled back a little bit more than I would like, but this wedge started to break up here to the upside, so it looks okay for maybe some continuation. But those drug names always scare me. This will be the name potentially where you wake up and it's up 80% or it's down 80% or something. Dolly Parton. Okay, let's go. From Gabriel, do you like IMNM for a pullback buy? IMNM for a pullback buy around 22 to 20. I don't think it should get back down there. I think you have a problem if this is retesting 20 again. I don't think it should be. I don't think it should get back down there. Maybe 22 is still okay. I don't like this bar from today. This is a penalty box candle, so I wouldn't be buying it in the very short term, and I would want to see it reset up. So I would say it depends what it looks like when it gets into that $20 to $22 area. Uber for an inside and up tomorrow. It's a super tight day for Uber. Uber looks great. Gap up, moving sideways. Uber looks great. Pulled back a little heavier than I'd like these last couple days, but yeah, let's see what he can do with the inside and up. Worth being on the radar. All right, gang. Looks like I got through everything in the VTF and in YouTube. I appreciate everybody's questions. I appreciate you guys as a team. You all rock. If you're in the YouTube, you know what to do. Hit the like button. Tell all your friends. Have a great night, everybody.